Today, Danish company Risk Intelligence have published a new strategy and goals heading up to 2025. And with me here on Link today to talk a little bit about these strategy and these goals, I have Hans Tino Hansen, CEO. It's good to see you again, Hans.
Thank you, Mike. It's a pleasure for being here to present our new strategy.
And we'll head straight into it, and we'll start with the maritime security. Well, where focus will be returned to it. Intelligence analysis itself will still be handled on your end, but technical development in terms of the platform will be outsourced in the form of partnerships. In terms of managing resources, how can we expect the cash flow to be affected by this strategy change?
Yeah, in the last 3-4 years, between 95 to 99% of our revenue has been derived from the maritime market. And what we will do now towards 2025 is to refocus our attention to the maritime business, which means that we will invest in new products, in marketing, lead generation, and sales, as well as technical development with, for instance, the new platform coming on in 2023 on the maritime side.
Indeed, and tell us more about this platform that you're aiming to launch in 2023. Has it been in development for long, or is this a new project?
It's a new project because previously, until now, we have been developing our platforms ourselves together with partner companies, but they have been insourced. We've taken the decision to do what we do best, which is intelligence analysis and working with the maritime market, and then let partner companies who are much better in technical development develop platforms in the future. So it's kind of a division of labor where we do and continue to do what we are best at, and then let others do what they are best at.
The partner you previously insourced, is that the same partner you now outsource?
No, but they will still be somewhat involved in our back end, so our production system, because our production system will still be our own, but the platform that we deliver to our clients will be a third-party product that will be customized to our needs.
And the partner that you've teamed up with to create this new platform, can you tell us anything about them?
No, we will send out a press release on that kind of subject.
Very well. We'll move on now to land-based security, and that will be separated somewhat into its own team. I'm curious regarding synergies with clients that might require both maritime security and land security. Will it be more difficult to handle those particular clients?
Yeah, when we talk about refocusing maritime security, it doesn't mean that we will drop land-based security. It just means that any development there in products or technical or anything will be only when it's warranted by revenue. The people who are working on the land-based side, they will still be sitting together with everybody else. So it's more, you could say, an organizational focus on having a land risk team, including both sales and marketing and analysis and product development in one team, more than we actually had before. And again, they will be working with clients. And remember, maybe from we discussed before, land risk, especially land risk logistics, is more solution sales, which means that a number of people needs to be involved in the process when talking to a client, rather than our maritime sale, which is more, you can say, transactional sales, selling one license, one person can do that. So in that sense, we will still have some synergy, but most of the clients on the land-based side, they are actually only on the land-based side.
We'll dig a little deeper now again towards the partnerships, because I found that a little extra interesting. Could you walk us through how a potential partnership would look like between Risk Intelligence and other companies, and what sort of abilities and functions would you be looking for in looking for a partnership?
Yeah. In general, we will focus partnerships on where we can do horizontal expansion. That means that we can address markets that we haven't addressed before or are not able to address ourselves, or vertically, meaning that it will be partners that are delivering products to our clients in other areas of their business or in other areas of the operations. An example of the last one is a Navtor, where we did a partnership with them, and they will have the first products coming online in 23. And they will be mainly navigation systems and similar, where our products are integrated into their products. One thing that we always look at is, of course, to avoid cannibalization. And obviously, with new markets that we haven't addressed before, there will be no cannibalization. And when we look at the vertical side, we are looking at complementary products that are not replacing our existing products, so to say, where our overlay, if it's our data, can actually be improving their operations, but not replacing our product elsewhere in the company.
Could you elaborate a little bit on what you mean by cannibalizing?
Cannibalizing is when you have a license and then it'll be replaced by a new license with your partner. And because you have a commercial agreement with the partner, you may have a 20% split or something like that, which means that your revenues will be, at least theoretically, lower than they were before. And in that way, you're cannibalizing your own revenues. And that's what we're avoiding by following the strategy on the partnership, the commercial partnerships.
And that's on expanding vertically, but I'm also curious about the horizontal expansion that you mentioned. What markets would you prioritize in these partnerships?
It is mainly markets that we haven't been able to address, where our data, maybe in a somewhat changed format, can be used. We will come out with an example of that within not too distant future. With a new partnership. So there are partnerships in the pipeline in the horizontal market expansion as well.
You set up goals for a year-on-year growth of 30%, where revenue target is 50 million Danish crowns. How does the goal compare to your current growth, and how will you reach this target? And perhaps more importantly, how will you stay consistently on this target?
In our current strategy that originates in 2018, we've had 20%, almost 20% growth year on year, including 2020 and somewhat 2021, which were COVID years. And that is, as I mentioned, 95 to 99% derived from the maritime security business. The additional 10% will come from upsell to existing clients and new clients due to the new platform. It will come from the partnerships, both the horizontal and the vertical. And these are the kind of the two main drivers behind the growth that we will see going forward.
And what of the churn rate and the net retention rate? I know that those are very important to your revenues. Tell us more about this strategy and how it relates to those two functions.
Yeah, since we have a net retention rate of between 105 and 112% during the last year, it means that we're actually selling more to the same customer base, even if there is a churn. And there's always a churn between 0 and 4% every quarter. However, the remaining clients, those who stick with us, they actually buy more. And that's why we have a net retention rate above this 110% currently. And we will continue to work on that by adding more licenses. With the new platform, we get an opportunity to also not only add more from our own side to the platform, but also sell third-party data through the platform to our clients that will also generate a revenue stream. So that's kind of partner revenue coming in on top of the revenue that we get for our own product, so to speak.
And by 2023, these revenues will become a break-even. But here, both revenues and costs are involved. And what about costs? How do you expect them to develop?
Costs will increase at a lower rate. Initially, there will be some investments or initiatives in 2023. But generally, both in 23, 24, and 25, they will grow at a kind of considerably lower growth rate than the revenue growth of target of 30%. Obviously, we cannot, at this moment, we will have to see that it is ceteris paribus, so meaning that we don't know about inflation, but we made some assumptions about inflation over the years. But all in all, the growth rate in cost will be considerably lower than the growth rate in revenue. And thereby, and this is actually a result from our existing business model, the existing strategy, that we are just about to have positive EBITDA, even with the existing strategy.
Before I head to my final questions, I was also curious to read about ESG and carbon neutrality in this press release. Tell us more about ESG and how that fits into your business model. I'm curious specifically about the carbon neutrality.
Yeah, for us, it consists of 4 areas. One is social responsibility, and that is supporting projects in the areas of risk where we work or where we actually derive our revenue from. So that could be parts of West Africa, East Africa, parts in the countries in Asia and similar. It could be shipfarers, so people who are working on the ships that we are supporting. We're already doing that. So that's actually not a new issue. Diversity is one too, where we are basically doing what we've always done. We are recruiting from a mainly male-oriented base when it comes to the analysts and the bulk of our employees, while, for instance, in marketing and lead generation, it is predominantly female. So we are, and we never made any kind of distinction between race or backgrounds or anything as well. When it comes to governance, then we took the decision before the IPO in 2018 that we will try to report and have governance as in the main market. Of course, we are a small company and we are on Spotlight, so there are some limitations in what we can do, but we're trying to use this as our guiding principle for governance. When it comes to sustainability, we are working towards becoming CO2 neutral, both by compensation but also by reductions. In general, except for some air traffic, we don't have a big CO2 footprint because we have analysts working with us from either from home or sitting in the office. So we're not generating a large CO2 footprint like an industrial company or something like that, but we still need to go neutral in that area. So these are the 4 elements of the ESG policy.
Of course, but I'll finish off with this question then. What are the greatest challenges that you're undertaking with these goals, and what is it that absolutely cannot go wrong for you to reach them?
All in all, what we are doing is that we are changing to what we do know. So we do know about the maritime business. We have kind of excelled in that area. We do know about the maritime intelligence analysis. That's what we do well, and that's what we're going to concentrate on. And that's also the market that we are going to grow. You can say that the land side will continue to be a strong upside because there is a huge potential still in that area. And obviously, when you're looking at growth rates that you want to increase, that is the main challenge. Of course, also you can say that costs you can regulate and adjust over time. But if there are certain spikes that are coming from the outside environment, then that is a challenge as well, as we see now with the inflation everybody is facing at the moment. So getting the growth rates right is probably the biggest challenge. But I would say that with the model that we have, that we derive it from existing clients and new clients as well on the maritime side with the platform and with the partnerships, then it's actually kind of a well-founded strategy. And we've spent quite a lot of energy to do this. And I also had third-party studies on the maritime market to get the figures and the data right for these decisions.
Hans-Tino Hansen, it will be very interesting to follow up on, but for now I'll have to thank you for your time and wish both you and Risk Intelligence continued luck in the future.
Thank you very much, and it was a pleasure being here today.